Hello again. Um, that microphone worked really well for the last video. I was pretty happy with the sound, so I'm going to just hold it up to my face here. Um, so I thought I'd give you a little more color on this D-volume strategy that I modified, fixed. This is a 3-month chart of the SPY. Stock price is plotted with candles, and the volume is plotted below with blue bars. The yellow line is the daily D volume. So say that we measure D volume circled by the red box at the end of a trading day. We would then use that D volume to predict the following day's return, which is highlighted by the red arrow. I find it useful to just shift the volume by 1 day so that we can look directly up to kind of correlate a given D volume to a price change. So I did some analysis and found that as long as D volume was greater than minus 10 million shares per day, I'm going to stay in the market. So this green line shows the 10 million share D volume threshold. So to know that we are in or out of the market, all we have to do is look and see whether the jagged yellow line, which is the D volume daily, it's below that green line. So usually we're in the market, which makes sense since the SPY is doing so well. So I kind of did that work for you. I just highlighted all the days in red that we are out of the market. And you may want to hit the stop button. I would understand if you did. So some statistics on over this 3-month period, which is 64 trading days. Over that 64 days, we were out of the market on 15 days. So on those 15 days, we had a 53% win rate. So conversely, we were in the market on 49 out of 64 days, and we also had a 53% win rate. So in terms of win rate, at least over this particular time period, the D volume strategy doesn't seem to be giving us an obvious advantage that we're not obviously doing worse. So there are some periods where the D volume attribute kind of oscillates around that threshold, and therefore the system tells us to get in and out of the market on a daily basis. I find that pretty irritating, and I would probably use my judgment. So if the volume, D volume, isn't rising definitively above or below that line, I might just stay where I'm at and avoid a trade. There's a lot of friction associated with day trading, and so I prefer not to if I can avoid it. So how did I obtain that threshold of minus 10 million shares for the D volume? I backtested a variety of values, and you can see this curve shows the profit, backtested profit as a function of the D volume threshold. So on the left side, when the D volume threshold is on the far left, it means we're in the market all the time. To the right, it means we're out of the market all the time. So obviously the profit has to go to zero there. So you can see that the curve, the profit curve, kind of ramps up steadily to the maximum value, then ramps down. So it's a good sign. It means there isn't just one magic value that seems to work in a backtest. That would be very suspicious and unlikely to work in the future. So as long as you're in the range, you're going to derive some advantage from trading this way. Notice that I didn't actually choose the threshold that produces the maximum value. That was a D volume of minus 5 million shares. But profit alone does not tell the whole story here. So let's look at the statistics of each threshold value backtest. So when the threshold is minus 80 million shares, as I said, we're in the market every day. And the profit there, I was a 25% profit over the last year. So the SPY did fantastic. So as we increase the threshold, we increase the amount of time that we're out of the market, and hopefully trying to avoid, the system is hopefully trying to help you avoid some of the drawdowns. So I compute the mean and maximum duration of trades. In here, so the mean number of days in the trade and the maximum duration in a trade. So like I said, I don't want to day trade. I prefer to stay in or out of a position for as long as possible. The choice of threshold's up to you. I could use that minus 5 million threshold and just refuse to get in and out of the market frequently, as I mentioned earlier. But instead I chose kind of a minus 10, which kind of extends the duration of the trades typically. So here's a cross plot of D volume versus daily returns over a year of trading. So the dashed line is the D volume threshold of minus 10 million shares. So if D volume is to the right of the line, that means that we stay in the market. If it's left of the line, then we're out of the market. So the pink circle is the most recent data point, so I can look at it every day and know whether I'm in or out of should be in or out of the market. So a majority of points are in the market, and that's as we hope. If you look at the points that are out of the market, you kind of notice that there are quite a few. Most of the big negative outlier price drops happen when that D volume falls. So that's why this strategy is working, and hopefully that's a general principle. So this is just conclusions drawn from a back test, and there's risk doing that, obviously. So finally, here's the comparison of the SPY 1-year return, which is blue, versus the optimized D volume strategy in yellow. So we've been able, in a back testing sense, have been able to beat the market with this D volume strategy, at least over the past year. So unfortunately, there's no guarantee that the market conditions that produced this outcome will continue into the future. So a back test don't predict the future, but it's another tool in our arsenal to kind of understand what a strategy could do. So anyway, if you have any comments, let me know. Up to like 200 plus subscribers, which is kind of amazing. The channel's growing fast. It's not because my videos are slick. I don't use clickbait, and I just basically dive right into technical stuff. So it's kind of cool that people are interested in this. Obviously it's hard to pick up the details over a YouTube video, but drop a comment and I can try to add more color to it. So if you get suggestions on ways that I can improve or things I should be discussing, let me know. Maybe I'll be able to do another video. But until next time, we'll see you.